Many of you have asked me to review Target Corporation, ticker symbol TGT, and the stock is down a lot. It topped out around $270 per share and now is sitting at $130 per share. And it did come down a lot from around 170 to 130 pretty recently, which is why a lot of you are asking me to talk about it, because we tend to get the tendency of just going and buying the dip, thinking a stock got cheaper, although it could just have gotten less expensive, and maybe the stock is still not a buy despite it being down, so much recently. This is what I'm gonna try to analyze in this video. Although Target has actually became a controversial stock, which is pretty, weird to me. No one expected Target to become a controversial stock, but this is just, what happened. I'm sure you heard the stories, and some people say this is why it's coming down. I don't think it's the only reason why it's coming down, but it could be part of the reason. So I'm gonna try to give an unbiased analysis in this video, so I really hope you enjoy it. Now, if we look at the latest earnings report in terms of Target's corporation, and we look at their sales growth, it's only 0.5%, which is not good at all. Target used to grow 2, 3, 4, 5%, especially after 2021. Only 0.5% in sales is not good in general. But this company, just like other retailers, are facing the same exact problem, and this is more around the SG&A expenses coming up. And the reasons they're going up a lot is because we have a tight labor market and we have higher inflation, we have a lot of jobs and low unemployment, which means that workers have better options with much better pay. So other retailers that depend a lot on labor, like Target, like Costco, like other Dollar General, like all these other kind of retail stores, Dollar Tree and stuff, they're having to give their employees higher and higher wages for them to actually stay, and this is hurting their margin a lot, and we can see it from their sales going up 0.5%, but the SG&A expense going up 5.5%, which is much higher than the normal 2 to 3%. And I don't know if the recession is gonna fix this somewhat, or not in terms of the tight labor market. This is what Powell is trying to do. But I believe this actually is creating a pretty good opportunity in a lot of the retail stocks. I've been buying a lot of them in my own portfolio, which if you're interested in joining, you can check out the link in the description below. But I've been seeing a lot of good opportunities in terms of retail. I think it's a hated industry, and I think there's a lot of opportunities in this market. Maybe Target is not one of them. We're gonna find out in this video, but I've been seeing a lot of good opportunities. And we can see how this actually affected their net income. It went from $1 billion to $950 million. It declined 5.8%, which is not good at all in terms of Target. And if we look at their balance sheets, they had an inventory problems. They had over $15 billion worth of inventories in 2022, and this was largely due to a lot of the discretionary items that Target actually carries. If you go to Target, you could buy groceries and other kind of essential things you need, but you could also buy things you want, like TVs and computers and all these kind of other electronics that most people could not really afford 2022 and 2023, after actually they bought a lot of them with the stimulus checks and all the things we had in the 2020 to 2021 mania. So all these kind of things and inflation, it made consumers more cautious in terms of shopping, so they were buying things they need and not just things they actually want. And this is only going to get worse in the future because we have student loans resuming in the United States in the second half of 2023. So this is going to affect them a lot. But Target did do well in terms of managing inventories. They went from 15 billion to 13.5 billion to now 12.6 billion. This is a very good improvement in terms of inventories, and I believe the management is managing inventories very, very well. But one of the reasons why inventories have also been declining, which is not a good reason, and I hope it gets solved very, very soon, and this is another issue that a lot of these retailers are facing, and this is mainly around theft and organized crime. And this article from CNBC says that Target expects organized retail crime fueled losses to jump by 500 million this year. So it's going to increase 500 million this year just from theft and organized crime. And this is very, very sad, and a lot of retailers are facing this problem, and I hope it gets solved very soon. Maybe it gets solved after the 2024 elections. We don't really know. We shouldn't really be counting on it, but this is something that's bad, which is adding more bad sentiment to those retailers, which is why I believe there's a lot of good opportunity in terms terms of retail stocks in 2023, and I've been trying, to take advantage of them. And if we look at the guidance in terms of Target, it's not the best in the world. They are pretty confused with what the softening sales trend are gonna bring. And it says the company is planning for a wide range of sales outcomes, so they're not even sure, but they are centered around a low single-digit decline in comparable sales, which is nothing to celebrate with Target. So there's a lot of bad news with the company. Now let's look at how much are we paying for Target and all these bad news after this huge decline. You might believe that you're paying some kind of a crazy low multiples that it hasn't been trading at before or anything, but Target is only back to its mean PE ratio, and this is the crazy part. Now it's sitting at 15 times forward earnings. The mean forward earnings multiple for Target is around 15, so it's only back to its mean PE ratio, forward PE ratio, after this huge decline in Target. Now that's not showing me that there's some kind of fear with Target or very bad sentiment, or it's not something that's giving me a bargain or makes me excited to just go and FOMO all in Target stock right now. Now if it was trading at 13 or 12 times earnings to kind of reflect all those bad news, that would make me much more excited to buy Target. But now it's only back to its mean PE ratio, which I believe is very, very expensive, for a company like Target. And Target also pays a 3.3% dividend. So if you buy Target at such prices, you're gonna get something pretty close to a 3.5% dividend every single year, which is actually not bad at all. Now in terms of valuing Target, I haven't done a valuation model on it. If you look at the EPS for the estimates from the analysts, they expect massive growth actually over the coming years, from 832 to almost 14 of EPS by 2028, which is around 5 years from now for their fiscal year. This is not something I'm actually counting on because of the sales that they've been putting up lately, and this is why I haven't put a valuation model, because I'm unsure of what kind of growth numbers I should be using for Target Corporation. So what I actually did, I took the 832 EPS, which we could do it here. We put in 832, and then we time it by 12 times earnings, which, as I showed you on this chart, a 12 times earnings multiple is much lower than 15 times. And next thing, this is some kind of a multiple I want to buy Target at to reflect all the negative declining comparable sales growth and the higher SG&A expense and all the theft. I'm not gonna be buying Target at a mean multiple and thinking I got a good deal. I'm not gonna be buying Target over 12 times earnings. This is just for me. And if I compare my options to other retail stocks that I actually been finding with much better business models, they are also trading at 15 or 16 times, but they are much better than Target in my opinion, with much better balance sheet and much better management and with much less theft than what's happening at Target. So I'm not willing to pay more than a 12 multiple, and if I time it by 12, I get $99 or pretty close to $100 per share in terms of Target. And if we look at where $100 per share take us to, somewhere pretty close to March or April of 2020, so pretty close to the COVID lows. And a lot of you are gonna claim that Target is never gonna go back to its COVID lows, which is possible, but a lot of other companies like Disney and some industrials, they are still sitting at COVID lows despite the huge rally that we had in the S&P 500, or pretty close to their COVID lows. So I'm not sure if Target is going there or not. I'm not trying to time the bottom or predict where the stock is going, but for me personally, $100 per share for Target would makes me excited to want to buy the stock, but I'm not buying it now at $130 while there's so many other opportunities in this market. So thank you for watching this video. It's not financial advice, of course. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.